Good afternoon, everyone. Today is March 25th, 2024, Monday, 1:56 p.m. Let's briefly discuss the Forex market for this week. Firstly, last week's net profit was around $44,000 USD, and the current account value is $230,000 USD. Last week, our main gains came from trading gold. We continued with our bearish outlook on gold, which proved to be profitable. Gold experienced a significant rally last week, providing me with an excellent opportunity to enter short positions. I entered short positions at this level, and the trades were quite substantial. Short-term trading combined with timely actions contributed to the profitability of the gold trades, accounting for about 80% of the total profits. The remaining 20% of profits came from trading crude oil. Regarding crude oil, profits were realized from previous positions. At a certain point near this level, I closed out my long positions. After closing out, crude oil experienced another rally. I managed to clear out positions in two different areas, and after that I hesitated to re-enter due to the unexpected magnitude of the decline. Therefore, I chose to observe and wait for further developments. This summarizes the basic operations from last week. There were some smaller trades as well, but they are not significant enough to mention in detail. Now let's talk about this week's market trends. Looking at this week, last week's dust settled on the dollar, and this week the dollar shows signs of strength. After last week, the dollar has become more robust. In fact, after last week, my conviction regarding the overall direction of gold for this year has strengthened. Overall, gold is likely to trend downwards this year. Let's take a look at the US dollar index. From a correct perspective, last week saw a strong bullish candlestick on the weekly time frame, indicating significant strength. Previously, our assessment was that the dollar would rebound from this support level and then resume its downtrend, potentially breaking below. However, it seems that this scenario may no longer hold true, or its probability is decreasing gradually. Instead, another possibility is emerging, where the dollar gradually moves higher from this area, forming a consolidation pattern. The resistance level at the previous high becomes crucial in this case. Currently, the primary level to watch is around 105. This week, we'll see if the dollar can break through this level. This indicates a shift in probabilities for both bullish and bearish scenarios, depending on market trends. The US dollar index is expected to continue its upward trajectory this week. The resistance levels to watch above are around the previous high and 105, based on the daily time frame. Therefore, it remains uncertain whether the dollar will continue its ascent, experience a pullback before moving higher, or follow a pattern of opening higher, pulling back, and then continuing to rise. In any case, the dollar has already broken above its previous level and is trending upwards. This is gold we're talking about. Looking at last week's trend currently in the short term, the demand for gold to adjust is increasing rapidly. To analyze gold, we need to open the weekly chart. Gold this week continues to open short positions, and the downward movement of gold this week will be very rapid or even extremely fast. This week, gold continues to be shorted, and from a mid-term perspective, the trend resembles the pattern seen at previous tops or is slightly smaller. Looking back at how gold behaved when it was at the top, it often exhibited similar patterns, with significant pullbacks following the peaks. Even though it may not be the peak now, a swift correction is inevitable. This correction will likely break below the previous week's low point, around the 2130 level, with a high probability of breaking this week with little suspense. In a conservative approach, the immediate target below is around the 2100 level, which was the area where a significant bullish candlestick formed previously. The targets for this week are around 2130 and 2100. Looking at the weekly chart, the area where gold transitions downwards is very strong, indicating a high probability of a break below. This trend, including the rally seen last week, lacked participation. It felt like a vacuum rally, but this may sound like hindsight bias now. However, my entries were made at what I believe to be significant levels, and I controlled my positions accordingly. Currently, after these two candlesticks have formed, the probability of gold breaking below on the daily time frame is very high. In this position, you cannot hold long. This week, holding long is not sustainable, and a break below is likely. After the break, we will look for a support level. The nearest one is around 2090 or 2080. Of course, it may not go that low. It might find support around these areas or slightly above them to establish a consolidation range. In summary, this market is all about shorting. Where to short? Based on calculations, the first target is around 2180. If it breaks below, the next level to watch is around 2190. This range between 2180 and 2190 on the hourly chart is a potential shorting zone. From a 4-hour and hourly perspective, if gold rebounds strongly later, the upper limit will be around 80, 90. If it breaks 90, it will reverse, indicating a bullish trend. If that happens, my previous analysis will be incorrect, and I'll take a straight loss. That's trading for you. There's right and wrong. If the analysis is wrong, you cut losses. If it's correct, this area cannot hold. Currently, 2140 cannot hold, and the decline will be rapid because of the pattern of downward movements followed by rebounds. There will be acceleration ahead, leading to a swift decline. Therefore, I'm bullish on gold continuing its downtrend this week. As for crude oil, looking at it from a weekly time frame, let's first remove the lines from last week and focus on the overall picture. From a midterm perspective, the bias is more towards an upward trend. Last week's candlestick was a small, bullish one, which can be disregarded as it doesn't hold much significance. So, on a broader scale, crude oil is oscillating upwards. Now let's switch to a line chart and analyze this area. If we're looking for entries, let's bring back last week's data and adjust it slightly lower. Last week there was a long position taken in this area. However, considering the consolidation in this range and the lack of rebounds, I think it might break below. It might be better to buy a bit lower, around 84 to 84.5. In this range, consider re-entering long positions. The more favorable the entry, the better. This week, optimization is key, and I'm optimistic about crude oil continuing its upward trend. As for the euro, looking at the chart from last week, it seems that the euro is likely to head downwards. Initially, there was some expectation for the euro to move upwards, but based on the current situation and the trend indicated by this line, it appears that the euro will continue its downward trajectory and seek support below. So, for the euro, we should consider shorting on rebounds, because once the trend is broken at this level, if it hasn't already, the normal expectation would be for a rebound and a continuation upwards. But if it breaks, then we need to consider another scenario. For instance, if it breaks below, then the previous support becomes resistance, and it's likely to move downwards towards that level to find support step by step. Therefore, the outlook is shifting towards a weaker position for the euro. As for the pound, last week it was positioned for long trades at this level. Long trades were indeed taken for the pound around the 4th. However, after taking the long positions, selling occurred quite early around this area. After selling, there was a retracement, and then on Thursday, due to the announcement of the Fed's rate decision, there was another surge. The following day, due to the Bank of England's rate decision, there was another drop. Looking at this area, it didn't seem reliable or strong enough, and later it completely broke through. Once it broke through, it's quite simple. You just shrink it and look for short opportunities. So, for the pound, considering how much it has fallen, it's likely to continue to rebound and then fall again. Observing the support level around 1.253, if it's strong, it might not hold because the declines have been rapid in the past 2 weeks. Regarding the yen, it needs some time. The yen is uncertain, and for now it can't be traded either way. It requires patience. Lastly, looking at this week's data, the dollar index is expected to continue rising. Last week it experienced a drop, but then recovered the following day, which was quite strange. This week, the dollar is expected to rise, while gold is expected to fall significantly. This week, crude oil is expected to experience a pullback before going long, and the euro and pound are expected to be shorted. So this summarizes the trading strategy and thoughts for this week. Additionally, looking at the economic policies from the peripheral aspect, there has been a qualitative change in the pace of Fed rate hikes. Last year, it was anticipated that there would be 3 to 5 rate cuts, but now it seems there will only be 2 or even just 1 cut. This indicates a more stringent stance by the Fed this year. Consequently, gold might not have much room to rise. That's all for today's video. Wishing everyone successful trading endeavors.